Hello everyone, so welcome to this trade recap. So today I'm just going to be going over this trade that I took on last Friday. It was this 1 to 2 trade right here. It's a retracement trade. So I'll just go over why I took this trade and the loss that I took before this trade as well. On the daily, you can see right here that pretty much we have retraced from all-time highs, and on Thursday we actually displaced a lot as well. So we went a lot down, and on Friday we swept this low right here, which is previous week's low. So we swept previous week's low, and we also had SMT with that. So after seeing that, my thought was maybe we could get a retracement trade to go back into the range. And so after sweeping out this sell side liquidity right here, I thought maybe price would want to go back up. So obviously I would want to wait for confirmation for that. So that's what I see on the daily. On the 4 hour, we can see that this is the thing here. We can see that on Thursday price went down a lot, and so because of that, obviously I don't want to be too bearish because of how much price has already displaced. And we can also see here on Friday that this is the starting of Friday. So on Friday, the price action is that it has slowed down a lot compared to Thursday, how there was a lot of strength going down. Friday, it was still going down, but there wasn't as much strength. So I think it's showing that we are starting to lose strength in terms of bearishness. And again, this SMT. And we can also see here that there was no H4 fair value gaps, which also again shows lack of strength. And we can also see here that there is a H4 fair value gap right here, and we can also see that the H4 fair value gap aligns exactly with this equilibrium point right here. So price would, how price moves for 4 reasons: to generate liquidity, hunt liquidity, rebalance the inefficiencies, or rebalance the equilibrium. So we have just hunted liquidity, so the next thing that price would want to do is to rebalance back to equilibrium, which is right here, or rebalance back to inefficiencies, which is right here again. So this is why that area right there is such a strong draw. And so now we have a strong draw and we have all this narrative. We want to wait for price to confirm that it actually wants to go to that draw. So on the H1, I see that there is a lot of low resistance liquidity right here. So LR, so low resistance liquidity range, that's what we call it. So meaning there's literally nothing here. There's no fair value gaps, no nothing. So when price goes to at least one of these highs, we would expect it to go straight up to all of these highs, because there is nothing here that is pulling price down. It's all just stacked highs waiting for price to take them out. After price inverse this fair value gap, which is the only sort of line of defense that we have, I would expect price to go pretty much straight up. So we have 9 a.m. candle right here opening up, and after 9 a.m. candle closed above this fair value gap, I started looking for long straight away. And another thing is we also have London highs right here, and we also have Asian highs right here. So my final take profit was Asian high. We can see also that we have midnight open here. So this was midnight open, and this was also London high, I believe. This candle here. So pretty much we have a lot of liquidity. We have a lot of liquidity that price can go up to. So we have midnight open, Asian high, London high, H4 fair value gap, equilibrium of the range. We just have a lot of reasons why price should go up. And because of that, but even though we have that, we still want to wait for confirmation, which is that H1 inverse fair value gap. Moving down to the 30 minutes, we can also see that there is a 30-minute inverse fair value gap right here when price closed above. So moving down 15-minute, we also have a 15-minute fair value gap that price closed above right here. So pretty much after that, at 10 a.m, when price closed above that, I started looking for longs. So 10 a.m. was here. So here, that is when I got my first trade. So we went down, tapped the H1 inverse fair value gap, and then we displaced upwards. And this is where I took my first long. So we closed above these downwards candles right here, strong close. So I entered there, got stopped out straight away pretty much. Well, not straight away, but I got stopped out, and then that's fine. I thought, you know, I knew that it was sort of a lower quality trade because I was on the 1 minute, and usually my strategy is to go on the 3 minute. And the reason why I went on the 1 minute was just because there was a 15-minute inverse fair value gap as well, and for my strategy I would only use 1 minute when there is a 15-minute, so that's why that happened. But also generally my main higher time frame PDR rate is that H1, so I should have used the 3 minute. So going that so then I just went back to the 3 minute pretty much after getting stopped out on the 1 minute. I saw that there was a lot of, it was sort of like a mini accumulation range right here, and we started having a lot of wicks, but price didn't want to close above, so I waited for price to close above this high right here for a change in the state of delivery. So once we closed above that, I entered right there. And I had my stops just below this candle right here. Just because if I had my stop here, it would just be like way too big of a stop, so I had it around here. It was like, I remember it was like 2.4-ish. And then I had the target here on Asian session highs, and that was the trade pretty much. There was also a fair value gap created right here afterwards, and we saw that price respected it. So even though it went pretty close to my stop loss, I just sort of like stuck to the trade because I saw that there was this 3 minute 3 minute fair value gap. I think there's also an SMT there somewhere, so let me just, yeah. So we can see here that this low, this low. So there was an SMT here as well. So price never ended up taking that low, but it did here. So there's a 3 minute fair value gap here that price didn't retrace into. So that's all for this trade. It's a retracement trade, and I hope you guys have enjoyed this video, and I'll see you guys in the next one.